Hi, everybody. This is Bitcoin Live with the Minotaur and the Power Law team. Today is August 14, 2025. And like always, we are going to take a look at Bitcoin price action. We are going to look at my different Power Law indicators. And then we're going to look both the global liquidity and the local liquidity. Okay, start with the Power Law. So there are many different indicators. You can join my Patreon. I will show you in a moment a link for that if you're interested. We have about 15 indicators. We try to update them and add a few more on a regular basis. And we do different things. This one is based on this approach that is called the quantile. Basically, you organize the data in terms of their deviation from the Power Law, from the smallest deviation to the largest one, and then you try to fit only certain ranges. Like in terms of percentile, right? You're looking at the lowest 10% of the data. Lowest in this case will mean negative deviations, right? So we're talking about below the Power Law. And then you're fitting, so this is what we mean, for example, for 0.05%. You will take only the 5% that is the farthest away in terms of negative deviation from the Power Law, and you're fitting that. Now, it turns out it's very interesting because if you go all the way to about 40 percentile, you go from the bottom. So getting the lowest quantile give us the support line. So here I'm drawing the support line calculated in a different way. Like, for example, if I take a 60% deviation from the general Power Law, the general Power Law will be this white line. The white line. And the white line represents basically, because it's calculated with this other method that is called the least regression, represents kind of like the average, while this one, that is the 50 quantile, the 0.5, it's the median. And you can see the median is parallel to the average, but it's lower. Mostly because it's basically kind of how you calculate the median, right? You take the highest values, the lowest value, and then you find kind of in between. You don't give weight, right? And so that gives you something that is lower, because in general, when you calculate the average, you also calculate a many point, right? How far away they are, and the many points there are in that region, right? And that brings, because there are very, very large values of the peaks, brings the mean, the pure mean, higher than the median. But they are parallel, so it's all power laws with basically the same slope. Same thing with the 0.5 percentile. It basically equivalent to take the support line. They are very similar. This is a green line, this is a 0.5 percentile, and the gray line, it's the what we call the support line that we calculate by a 60% deviation. So it's nice to see convergence of basically doing different methods to fit the data, but getting basically the same result. In this case, we always fit. So whenever you see other people using the quantile model and they say it's a different model, it's not a different model. It's simply another way of doing. The quantile model applied to this, right? Applied to Bitcoin, applied to this long-term trajectory. You take a log of the time, you take a log of the price, and then you fit this. So it's basically the Power Law. But it's very interesting because up to basically almost 50%, all the different quantiles Here we don't show all the different lines. We show them in like kind of a gradation in the color, but these are different lines, right? For every percentile, there will be a line, a line, a line. Here, kind of shaded in colors, right? In fact, let me show you how a pure percentile will look like. I was superimposing another indicator on it. So all these lines are parallel, and we go all the way to 0.5. So it means, so this is another way of saying there is some kind of core behavior below the power law that is the real power law, because all these lines are parallel. So they are very consistent, they don't change in slope. They just change in terms of where the y-intercept is, right? This eventually will intercept the y-axis, and that indicates the different height that correspond to the different percentiles. Now, as you go above the power law, things start to change, because together with the general power law direction, there is also this decay of a peak. The peak are decaying. So it's really a combination. You can see, right? It's kind of bending, right? You see how this upper curve is bending. It's not really following the middle one. And there are different ways of doing it. If in the simplest possible way, eventually this upper level will cross the blue line, but you can do it in a more sophisticated way where you can avoid the crossing. So anyway, what is the result of this? It's actually kind of best case scenario, because this method has a little bit of this decay, but it doesn't emphasize it too much. Like, for example, this other method here, you see this one is actually emphasizing more the decay. This decay channel is calculating the decay channel. And this decay channel, by the way, never crosses the blue line. So there are different methods. Right now, they are kind of similar, but eventually there will be a big discrepancy. This orange line will come closer and closer to the blue line, while this shading area of a quantile model, it will overestimate the peaks. It tends to overestimate the peaks. Just to explain the different ways of doing these calculations. But for most of it, in particular at the core, so below the 50 percentile, we do agree. And here I made a table of what to expect. For example, the way to understand this chart is, okay, higher and higher this value of a quantile, farther and farther away we have from the reference power law. So right now, for example, we are 0.71. Yesterday, we were 0.72. Now, if you're looking at the value of the peaks in the past, we're talking about 0.9, 0.95, etc. So the idea is, if we have a peak that is similar to what we had before, probably you're going to find it in the 0.9, 0.95 region. Now, is that going to happen? I don't know. That is what we are discussing over and over again. That it's not necessarily going to happen like in the previous cycles. But this is still a useful method, but thinking that, we do have to reach this very, very high value quantile to identify the peak, maybe is misguided, but anyway, so here's some projection. So remember, 0.5 is kind of like a reference value. So we are actually above, we are closer to the average instead of in median. And so in terms of quantile, it's more like close to 0.65, something like that. So if you continue along, let's say 0.6 or even 0.7, and we're looking at the end of the year, so we are August, something like 3 months from now, we're talking about 125. And the next quintile, I don't have a 0.8, I should add actually 0.8, but anything between 125 to 135, something like that. Now, if you go and look at the higher quintile, we're coming closer to 200 when you go to 90 or 0.9 or 0.95. Okay, so you can superimpose the other model, this what they call the full model, and you can see, again, if we reach 200K, close to 200K, we are ending up to this very, very high level of a quantile, so closer to 0.9. So we two agree on this, the two different models. These are two different methods calculated in two different ways. We are to calculate this full model here, where I basically kind of bookmark where the peak is going to be. I simply look at the residuals, the difference from the power law, and then I fit these peaks to get this decay channel, basically. So it's a slightly different method, but it converges with the quantile method up to a point. Anyway, it's to look at the recent. So this is kind of an introduction just to explain, because I know that many people look at this quantile method, and I'm not sure people understand how it works. But it's kind of interesting. We are seeing over and over again this dance, right, where we seem to want to leave a power law. We kind of follow the power law, maybe at a higher distance, from the power law itself. Then we go back to it. Then we leave again, and there is a correction that seems to bring us back to the power law. So this seems what is happening this cycle. It is very, very different from what happened the previous cycles, where usually there was a very aggressive movement that brought us away from the power law. We reach a peak, we had a correction. This cycle, we're simply, flirting with the power law. We are following it, we are leaving it, coming back. And so this seems, every time we think that this is it, we are leaving the power law, then there is some kind of correction that brings us back. So I don't know, are we going back to the power law levels? If that happens, that will bring us to around 113, something like that. This is where it is right now. Yeah, 113. Anyway, so this is my analysis based on the power law. Let's look at the liquidity now. Marco, are you talking? Can you show you?
Yeah. Okay. Yeah. I had my mic muted. Yep.
Yeah.
We have been doing some moonwalking like Michael Jackson used to do. So we are going up and down and all around. But there's an explanation to that. Let me share my screen and we'll get into it. There's an explanation for everything. All right. Okay. Here we go. All right. Once again, for those of you who might be new, we are looking at the daily time frame on the futures perpetuals because that is where the leverage is and that's where the bubbles are going to blow first until they pop. All right. So yesterday we put in an all-time high on Bitcoin here. Let's zoom in a little bit here. We put in an all-time high and we started tapping into this high concentration of 25x liquidity here that's packed in real heavy, and it's been there for since the middle of last month, so or beyond that, actually the middle of June. So it's been there for 2 months. That's a long time. It's heavy concentration. So the market, when it tapped into that liquidity, that was a lot of buying pressure that hit the market, and you would think that buying pressure would push it higher. But sometimes buying pressure forced from liquidity, force trap shorts who are forced to buy here, creates a vacuum on the order book because you take all the natural buyers out and you can get a drop. But more specifically, what happened here is if you can see this move when we made this move up, we started moving up on August. Let me put a volume profile in here for you guys so you can see it even clearer here. Let's get a little bit bigger. Let's pull a volume profile here so we can see the volume. All right, so we have our midpoint here, point of control. So this when we flipped this zone, we were below it and we were taking liquidity right here. The market makers taking liquidity. This is cheap inventory, right? They're buying low here from forced sellers, and then they sold it here to forced buyers, right? So this is a real easy move to see. When we get below this line becomes a supply zone, and then we have to fight to get above it. We were battling, and when we get above it and flip it, this line becomes a demand zone right here. So once we flip this line, but the main thing I want to highlight here is I want to highlight this trajectory right here. This is not a very natural trajectory. This is market maker behavior. They're carrying this, they're influencing and moving this market higher and manipulating the market. But what happens is underneath this particular type of move is short-term liquidity. And what happens when you have that short-term liquidity built on this sort of fake or false move up, they will come back and take that liquidity. And that's exactly what happened. They actually hid between that high PPI, that wholesale number today. So they use that as cover. And this is just very natural behavior. They're just coming to wreck all this fresh liquidity that was chasing this move up. That's all they did. So now nothing has really changed. This is the type of action that you get. We still, this is still on target. This is still the target. So we don't get caught up in the, we don't get caught up in these little whipsaw moves. This is still the target ahead here, and we're still on track to take this liquidity. Now, what may happen here, I'm going to zoom out a little bit. Let's back down to the 25X just to take a closer look at that composition. There is a little bit more liquidity here that could come into play. We have this area, this zone here. How much they take, or they could take all. If they take all of that, that takes us to 110. We don't want that. However, this is the highest risk. This down to about 114, and that may be it because we have a profile here that's running like this. This is the zone, and all the liquidity that's in this zone is what's called internal liquidity. And since this is the bottom of the this is the value area low of the zone, this liquidity is outside of that zone. And what typically happens is this liquidity will remain and it will continue to grow until we come down later on after the cycle top. So there's a strong chance that we don't have to take this, because even if we take this, we will lose market structure doing so. We don't want to put another lower low, and then we start doing that. So we don't want that. And the market's not really in that condition. We're still bullish, so we can put in this little pullback and get back on track. And the reason I say that is when I put the liquidity back all the way back to 3x again, we can see that it's pretty clear that the market is not taking any long side liquidity. So what's in question kind of remains here. And at this trajectory, this liquidity should survive because they're not taking the longs right now. They're liquidating short side at this time frame, which is the big time frame. So we should be fine. So yeah, you can clearly see right here that this liquidity grab, that's what this was today, should not affect the party. Should keep going. You know, the parents are out of town and the kids are having the house party. So we should keep it going, keep the party going, and let's go ahead and finish what's at hand here.
Would you say that was almost just like a kind of classic flush out, Marcus? Because typically when Bitcoin starts displacing, retailers go long with big
Yep.
leverage and
Yep.
they just get taken out, right? So
Yeah, because what happened is when, first of all, there's two things. You have a high composition of buyers there. It's a ton of them compacted in
which they
there.
did tap into, like they
They,
did technically take that out, right? Or
right.
they started
Well,
tapping.
they tapped it, and they tapped it, and it flooded. It created such a flood. It was very easy to reverse the market there.
Yes.
Because if you have all of these buyers here, you need as much inventory as you can to liquidate this, right? So if you just keep going up through it, you're going to have an imbalance really quick. So where can you get? So when you tap it, you cut it in half right here, and you got a lot of buy orders on your book. You're short. You need short side inventory to sell into this. If you take
Yes.
this, this is not enough. This is not enough inventory to offset that. It's not enough. Simple
Mm.
math, right? So what you do is you take this and you sell it into here, and then you pick up a little bit more because all this whole pattern right here creates a lot of retail FOMO. It's
Hmm.
look how unnatural that pattern is. It's just basically on a 45-degree angle going straight up. Well, that's going to create a lot of longs chasing that, and it was a lot of
Hmm.
longs that chased that. So that pattern creates an opportunity for the market makers to dip back down here and liquidate this fresh, very fresh, like baked fresh Italian bread. And take
It's
these,
good. It's a good.
yeah, very
It's
good.
good stuff.
Yeah,
The best bread in the world, huh?
take these fresh longs, and guess what you do with that? And you add that in up here, and now you got enough to offset this. This is so much compacted liquidity. We got to chisel through that, then we can get off to the races. So
Yeah, what, and correct me if I'm wrong, Marcus, but this is really interesting because, when these pools start to get taken,
yeah,
I've done back testing on these patterns, and it's interesting because there is different patterns for how the pools get taken out, but one way or another they get taken out. And what I find
yeah,
interesting about this in particular is you can see if you move your mouse to the left, we had that range for a while and then we displaced up. And now we've done the
right,
same thing once again. We've
right,
ranged for a while and now we've
right,
displaced up. So would you
right.
say like this pattern that's playing out likely will probably continue doing that? Or do you think there's a chance we get a big displacement and take the whole pool out?
Eventually we're going to get a big move up. I think this composition here is disrupting that.
Yes.
There's a lot of little micro things you got to look at here. The last time we displaced, look how long we consolidated near the pool.
Yeah.
We consolidated there a long time. That gave the market makers a chance to get prepared to take that volume, and they didn't have to move very far. But
Yep.
when we did it over here, we didn't have very long to get ready for the move. You notice it's just been this 45-degree angle. There's no there's no prep, there's no consolidation to
Yeah,
get ready for that.
I was looking at that
Yeah.
yesterday. Say, oh, we are going in a straight line. It's kind of,
Yeah. And
it's
when
not
we
so, not
and when,
sustainable.
exactly,
No.
exactly, Giovanni. And when we do that, it's kind of like touching a hot stove. If you don't have your gloves on, if you're not ready, you're gonna come off of it. You're gonna react to it real quick. So that's why it didn't last very long at all. So
Yeah.
we'll eventually come back. It's just how it goes. What's
It's
good?
it's kind of amazing to see like it play out in real time because you
Mhm.
can literally see like
Yeah,
forget looking at the news or having access to any news articles, anything like that. You can literally see retailers jumping in on FOMO of hitting the
right.
all-time high and then
Yeah.
all their positions getting taken out in the next candle. It's classic like maker behavior.
Let me show you how it looks at a higher lower time frame. So just focus on this move right here. We're going to highlight that. And now we're going to drop to the 15 minute and you can see them coming in. So
Yeah,
we go
yeah.
to the
This would be
15
cool.
minute. This is the 15 minute right here. So here's that move where we liquidated. Let me back out some of the
Wow.
colors here. Yeah, make it clear.
Yeah,
So
you're gonna give me a seizure with that.
here was the move up, and look at all we liquidated all these shorts, right? And then look at all of the long side liquidity that chased it. Is this,
Wow.
and they
Yeah.
came back for that, all of that. So that's what they came and got. Yeah,
If you look at the displacement there of that short liquidity, like on the 15, I mean, that look at that at the top, that
yeah.
it's like to a T, right?
To a
It took
T. Yeah,
it and then
yep,
that was it.
yep.
There was nothing left.
Nothing
So,
left. Exactly. No more fuel at that time frame. Yep, that level.
yeah, at that time frame.
Yep.
Yeah.
So that's this. One other thing to highlight today is the difference in how this pool is being mitigated versus in 2024.
Hmm.
This is a market makers and institutions playground. They are really
Yeah.
just taking their time, moving the inventory around, controlling the retails, not letting, they're just controlling the market so much better than they did in 2024 before the ETFs got in there. So look at how it displaced in 2024. I mean, When we came off of it the first time, we touched it and came off, and then
Yeah.
boom, there's just one move up, just boom. That was it. That's retail. That's short-term holders, FOMO, all that. Now with the ETFs, we have this more structured ascension. It's very structured. They move it up, consolidate, move it up, consolidate. So um, very interesting how it's going now. But the good news is, no matter, I always tell traders and investors, don't watch the market because it's going
Yeah.
to chop you up. Just pay attention to what they're doing. They're still displacing. It's not done. No matter what they do, they're going to take this out, right? So let's not get caught up in all the up and down and FOMOing in. Everybody in our crew, right, Sebastian? Our algorithms are selling here and they're
Yeah.
buying here.
Yeah. I mean,
Yeah. Yeah,
we
that is a
understand
cool
that.
thing about the algo,
Yeah,
right?
yeah,
It's
we're
like
buying
it's
here,
cool to look at
selling
the
there.
stuff
Yeah,
after the fact,
yeah,
but what is happening, you will
yeah,
go crazy to try to interpret all this stuff, right?
absolutely.
But the algo, I was looking at that short-term um, chart that you were showing, right, the 15
Hmm.
minutes,
Yeah,
and all the red regions were exactly where the algo was selling and buying.
It's
yeah,
cool, isn't it,
yeah.
Gio?
Yeah, it's
Oh,
yeah. In fact, Sebastian will show, but
yeah,
it's exactly doing
I'm,
that.
I'm
So
gonna steal a little thunder from you, Sebastian, and highlight this area right here, right? So we're
You
just
go,
gonna,
bro.
and I'm gonna give it back to you. But okay, we're gonna just look at this area here where when the market makers were harvesting this liquidity, because this is a manipulated move right there.
yeah,
So these are forced buyers. So they're selling into these guys, and then down here, these are forced sellers. So
yeah,
they're buying from these guys, and they're gonna sell this to the next guys over here.
yeah.
Mm.
My bot sold exactly where there are these red regions, and then he bought
Yes.
again
Now watch
as it was
this.
going down.
Watch this. I'm gonna slide the algorithm over now real quick.
Yeah,
Okay,
this is cool.
Yeah,
here's that move right there, and
Wow.
the algorithm took inventory that it bought over here, and it sold that inventory to these guys over here.
yeah,
Right,
Mm.
right. That's what it did. Right, and then on this side, the algorithm, while everybody's getting liquidated and they're forced to sell, the algorithm is doing what? It's taking buy positions, right? It's buying here,
Yes.
here, here, all through that liquidity, just like the market makers do, because that's exactly what it does. It's a market making
mhm,
algorithm. So I just want to show that.
Yeah.
And
It
yeah,
and it gives you the ability, I guess, to trade without the fear of knowing when these moves are happening, you're already one
you're
step ahead,
already doing
right?
it because
You're not part of the exit
right, right,
liquidity.
right,
You're following what the makers are doing. And
right.
that was a 5 minute chart that
Yeah,
Marcus was just showing. So
yeah.
I'll
yeah,
show the
All right.
15
Okay.
when you're
Let me.
done with this, Marcus,
Yeah,
and we'll
yeah. One last thing. Somebody was just asking. I'm just gonna stick to that. Somebody just kind of wanted to have a price projection of where it was going or could go. I'm just gonna do that really quick and then turn it over to you. So the good news is we have this new liquidity. You for everything we don't like about the institutions, you gotta love that they're creating this liquidity. When you have a straight up market like we did in 24, you don't get this. By going slowly like this, you're building more exit liquidity for the price to keep going up. If it just rockets up, then we're going to stop here at 130. But because it's going meticulously slowly and consolidating, we're getting an extra. We're already at 155. So you can thanks the institution's price action is creating this new liquidity. You can see very clearly where it started. Right, the consolidation started right here.
yeah.
There's a consolidation, and the new growth also started right there. So
yeah,
so you can appreciate the fact that they just gave you another 25,000 points on Bitcoin. So now when we finally mitigate or liquidate all this, we typically can go another 10%, 20%
Mhm.
higher. So let's add that on there. So we're at 155. Let me bring it down. Oh, I already
Because
have a
that
line.
pool, Marcus, that pool that started building above the primary pool, that's getting bigger. I've been
It's
watching it.
it's
It's
yeah,
been
it's It's growing. This is going to fill in. It's growing, right?
That wasn't that big last week
No, it
at all.
wasn't. Right.
It's
It's growing. That's a good sign. That's very healthy for higher prices. So let's add our 20%. That puts us at 188, more or less. So that puts us here like this. So then we come up here and then we get into some type of price discovery, right? Situation like this, like that. So now we're going to have exit. We're going to have return liquidity coming in here, and then we'll get new short side liquidity coming in here, and there's your target right there, 200,000, more or less. That's how you get there.
yeah. And I think, you say this well, Marcus, but people like where they go wrong with what they're doing is they're looking at Bitcoin too much, right?
Yeah,
And like we all love Bitcoin, but
yeah,
a lot of people, and often people I mentor as well, will tell me, oh, I'm so bored. If you're
uh,
bored, you're watching it way too much because
yeah.
actually, when Bitcoin's boring is when it's preparing for its next
Oh
leg
man,
up. And you can literally see that in the consolidation periods, right? So, like, next time you think it's boring when it's trending sideways, we get excited by that because we
we
know
love it.
the leg's coming. Yeah.
Like here's a good example of that, Sebastian. How do you make money with this? The only people that make money on a move like that is the people that's got tons of Bitcoin already, like Michael Saylor or somebody. You can't get in here. You can't chase that. If you're smart, you wouldn't chase that. So you can't really get in. But when it's like this, you have all the time in the world to get your positions ready, set your orders, let your algorithms load up, and it just gives you time to take profit and keep just meticulously making money. So I love this pattern. Yep.
Yeah. And what's remarkable is that it's actually one of the most advantageous price structures we've probably had in like the last
Oh
five
man.
years. And most people are still losing money in a
Yeah.
bull market.
Yeah,
That's what's crazy.
I was talking to Giovanni about it. It fits into his model that I hope this continues forever. Man, I love
Yeah.
it.
Yeah.
Yeah. Yeah. All right.
Yeah.
I mean,
Yeah.
the algo is having a field day.
Yeah.
Yeah.
It's like
Well,
very happy. Because like, okay, yeah, let's you is basically doing what Marcos is
Yeah.
telling the clever people are doing,
Yeah.
and you don't have to do anything. That
We're
is
we're
yeah.
amazing.
we're making money. The market makers make money on that chop, that consolidation. We're printing money on that consolidation. We love it.
Can you guys see my screen?
Just a second, give me a second. I'm going to
Thanks,
actually.
Giovanni. No
Yeah.
Yeah,
rush.
yeah. Go ahead.
Yeah.
Okay, cool. So what I want to show here,
Is there
for
a
anyone
way of
that's
for you to make it a little? Because I'm going to let me play
like
around
that, that's probably the biggest I can make it.
with you guys. Okay, does it look
Yeah,
bigger now?
so
I kind of enhance it. Does it look bigger? Okay.
it's better. Okay, cool. Welcome anyone that's new. So I'm going to give an overview of what the algo is doing, and this works really well because we can kind of look at the exact liquidity charts that Marcus was just using, and we can look at how these moves have been made. Now, what I'm showing here is a 15-minute variant of the algo that's using the algo's natural take profit. So previously, Marcus was showing you 5-minute time frame with a fixed take profit. So the first thing you want to understand is the algo can be used in a multitude of ways, right? You want to think of it like a tool that really can be built to do whatever you want. And it's unique in the sense that the algorithm can be used either to straight trade Bitcoin USDT, meaning you put up USDT and you get USDT back in return, or it can be used by collateralizing assets such as Bitcoin, using that Bitcoin as collateral and then gaining yield on top of that Bitcoin. Now, we can do that either in USDT payouts, or some smart people in our community have also started trading it on inverse Bitcoin charts. What that means is you post your Bitcoin as collateral and you receive Bitcoin back, which in essence is mining with software for a
Yeah.
fraction of the cost and a fraction of the risk and a fraction of your hardware becoming redundant because of the speed of technology evolving. So, what's important to understand is what Marcus was just showing everybody is how easily retail traders and traditional investors are getting chopped up inside a market because where they go wrong is they're not using leverage effectively. And I wanted to touch on this today because Most people don't realize that leverage is the most incredible, powerful tool you'll ever have access to. I mean, you can literally sign up to an exchange and start borrowing at 100x the power of your wallet.
By the
I
way,
mean, you
we
go
don't suggest to do that at all. These are the
at
people
all. No, no, no. And yeah, I want to make that clear. I'm not making a suggestion about using large leverage, but I'm basically insinuating that when you leverage is used correctly with efficiency, it's an incredible tool. And where people get liquidated is by using 100x, 50x, 25x, not understanding how to use it in an efficient way. Now, on that move, I just want to come back here and show how the algo's kind of been trading these legs up. So everyone can see here, I'm using a free liquidation heat map indicator on TradingView. Not as good as what Marcus shows with the trading different, but it gives you a rough idea of what's happening. Now, the algo is picking up positions here, right? We're buying, and it's been patient. Now, in this period, right, right here, where the price is just doing this, most people are getting bored, right? They're getting bored, they're getting fed up with the price not doing anything, but the algo is not thinking like that. The
Yeah.
algo is poised and waiting for the next entry. And what you'll notice it does is it picks the spike up, market starts reversing, and it sells its position, right? So the algo, although it's not predictive, when you actually watch how it trades, it's often one step ahead of what the market is actually doing because it's reacting to the data it's receiving live. And I want to show everyone this is the leg up the other day when we went up to 122K. And I want to show you how good the buy and then how good the sell was. So we made our buy here. The market had a huge run up, like absolutely massive. And because we're using the natural take profit of the algo, what that means is it's going to hold the position until it detects a trend reversal. And as you can see, the algo decided to sell here. And look at what happens after this, right? The market continues to sell off straight back down into the liquidity zones, right? And as we can see, comes all the way down. Look at this wick here. Marcus can attest to how many liquidations would have happened just on that wick alone, right?
Tons.
Most people would have been destroyed at that point.
Mhm.
Now, most
That,
people at this point are,
that's
in
actually a stop hunt wick.
that's a
That's the
stop
wick.
hunt,
Yeah, it's a
right?
stop
So,
hunt. Yeah.
and this is the game it plays. It pumps up, everyone goes, this is it, right? Let's load up on Bitcoin. Let's go 50x long, 25x long. And most people are buying here. And when they buy, the market gets sent the other direction. Now, the algo's not stressing because we're not even in the market right now. And look for where the algo makes its next entry, right? It waits all the way for the selling pressure to stop and then starts here. Now we make our next entry and look at this next move. I want to make this point again. Market runs all the way up, huge move, right? Nearly 5%. And it holds on until the trend reverses. As we see, we get a bit of selling pressure and we sell here. Now, the algo is completely out of the market at this point. Now, the reason it's not
And
buying this dip, you go, Giovanni.
yeah, and by the way, for the people that are not too familiar with our system, we are not selling Bitcoin itself. We are selling and buying futures with a
Yes,
small leverage. So leverage, like Sebastian was saying, is a powerful tool if used wisely, right? So
yes,
instead of using this 100 pair from degen people that are the people that are actually are basically creating this pool of liquidity,
yes,
these fools, we use very small. So where if Bitcoin goes up 2, 3, 4, 5%, for us it's almost like a 20% move if you have like a 5 pair leverage. So that is a wise use of a leverage.
exactly.
Yeah.
Like Giovanni said it perfectly. And, when you actually break down the structure of these pools, and just so everyone understands the power of liquidity trading, I mean, I think anyone that's been watching this show every week, watching Giovanni and Marcus present this, you can start to understand how powerful this is. And there's a reason that the liquidations are laddered from the highest leverage to the smallest leverage. And Marcus can talk about this as well, but there is a reason that we go 100x first, 50x, 25, and it goes in that cascading pattern. Now, the people using 3 to 5x leverage, eventually, if they're not using a system that understands how to use it efficiently, even they will get liquidated, right, Marcus, at some point. But
Yeah,
the
somewhat.
problem with what they're doing is they're often setting their liquidation levels or their points up where the rest of the market is getting liquidated. So even the people using smaller leverages are not using it the right way. But with our system, by design, because it's so smart at dispersing the capital efficiently, right? We're never in a position where we're over leveraged or we have too much margin in the market at the wrong time, right? It's always kind of poised and using your capital in the right way. And as you can see here, since we sold here, the algo still hasn't bought another position because it's probably still thinking we're going to get a little bit more selling pressure. As Marcus pointed out, we may go down to 116, maybe not. But as you can see, Marcus, bang on with your chart, that's kind of the next pull here, right?
Right.
It's the
And,
same
and
thing on the 15-minute.
and just to add to what you said, you brought up a really good point that needs to be highlighted when you said, even if you're not careful, 3, 5, 10x, they get taken out too, even though it may be later. And I've heard people say, well, why can't they can just sell out? Why they're so far away, they won't be there when the price gets there. And it's absolutely not true. What happens is if you're not trading the way the market makers are working the market, you will get taken out because what happens is if you enter your trades in at the wrong place, you go into drawdown pretty quickly. And when you're in drawdown, you're like a moth to the flame. You're not going to close, or you can close early, but you're going to lose money. So what typically
Yes,
happens is people are going to hang and they're going to hope and pray and they get liquidated. Even at you probably say, well, how does a 3x person get liquidated? That's how it happens. And the market, if you don't position your trades correctly, you might go into profit a little bit, but not enough for you to come out. And you just get held there like a magnetic beam, and you just eventually will get harvested. It's the most
that's
amazing
right.
thing. It's amazing.
Yeah,
Yep.
it's the perfect explanation because the reason they get liquidated is the psychology behind not wanting to lose on their positions, which
Right.
eventually causes them to lose everything, which is
Everything.
really like we can
Yep.
go into this maybe next
Yep.
week and maybe a
Yep.
little bit more around the psychology of liquidations, but it's really, really
And
interesting.
that's
And
what the
at the end,
algo is going to help you. The key to not letting that phenomenon happen to you, no matter what leverage you choose, is is the entry, is when you enter the trades. The algorithm is going to make sure you're entering in the best place for that not to happen. That's the
exactly.
point. Yeah.
And that is, I guess, one of the fundamental keys of using technical DCA is it always puts you in a position to succeed, right? Although not perfect,
Yeah.
it's not like every buy is perfect. Sometimes it gets it wrong, but you can see here
Yeah.
by looking at this in these periods of high volatility, which is, the highest concentrated chance of losing money is when the algo shines, right? So it shines in chaos, right? And that's really important. So I think anyone that's watching this that is looking for something that can take away the emotion in what you're doing and take away the fear of constantly, watching what Bitcoin's doing, it's a powerful tool, right? And it's not perfect, but what it does extremely well is follow a set of rules and do that over and over and over again without, thinking about what the market's doing or thinking about sleep or thinking about food, right? It's beautiful like that. And I think, if you're looking for a tool, we're more than happy to have a free call with you and delve further into what we do. So yeah,
Yeah.
thanks, Giovanni.
Yeah.
So again, if you want uh, to test the system, there is a link below that is scrolling right now. You can also DM me if you follow me on X for further information. But yeah, this is a very good starting place. It's basically a webinar that we created with the guys. We have a new material. We had a conference in Las Vegas where we made a full presentation. So you will find links to these talks in Las Vegas following the uh, webinar. Okay. Um, let's take some of these questions. We have a few questions. Okay, we have these according to Radan. We are the best team of YouTube. Of course, we
Hey,
are.
that's the smartest man that we've seen today.
Yes.
He's going places. That guy's got it.
He wants
And
three different predictions. I don't like doing
prediction.
predictions. That's why I rely on Giovanni, because he gives the best ones.
well, like I said, there is this premise, right? If we use the decay channel that we describe, and the decay channel has worked in the past. Like you could have used the first three bubbles to predict the fourth, so to predict the last cycle within a few $1,000s. It's pretty amazing. Um, it gave a prediction of about 65,000 for the peak.
Wow.
Using the previous three bubbles. Okay, so the idea, okay, if we work for the first four bubbles, will it work for the fifth? That is the premise, right? Now you can extend the channel like we did, like I showed you in the beginning, that the orange line in the power law indicators, and then that gives you where the peak should be. That under the premise, and I know you say just that and nothing else, okay, a number, but unless you understand the premise, the number is meaningless. So I'm giving you all this premise. The premise is if everything repeated like in the past, because it will not be. It will certain thing will be the same. Certain thing will be different. What will be different is that we don't have this 5-pair deviation from the trend. We are going to have the calculations say, given this decay channel, the deviation for this cycle was only 80%. It looked only, if you didn't consider all the things that happened this cycle. Right now, 80% deviation seems huge, right? Because we didn't have yet in this cycle, in this bull run, a larger deviation all the way to 80. Maybe we went 10, 15, 20% away from the power law, but no more. And so 80% in the beginning, when there were people, when everybody was so bullish around December, and people were talking about 400,000, a million, and I was laughing at them and saying, what are you talking about? Best case, we go to 200, right? Now 200 seems bullish. It's so silly,
Yeah.
And there are still people that are saying that maybe we go to a million, but I don't know why people listen to them at all, Now, there are some people that say, well, maybe the peak is not at the end of December or beginning of December. Usually, historically, we had a quarter four. Sometimes it was as early as end of October, as late as mid-December, with different cycles. But we never went to January, right? And so people say, well, maybe we go to quarter four next year. Okay, maybe, it's just that it will be a very, very different pattern from what we have before. So this kind of prediction that are now vibes, because everybody else, they do vibes, and then if they are okay, they say, oh, see, I told you so. And if they don't, then basically they hope that people forget what they say, right? Because the internet forgets very, very quickly. People know.
I always take screenshots, Giovanni, of these gurus. I always take screenshots because they delete the posts once it
but they don't
happen.
care because it's all vibes, right? So today is this vibe, tomorrow is another vibe. I care, and they show you exactly my logic, and I arrive to the conclusion, right? But the conclusion, like everything mathematical, it's based on the premise. If a premise is not there anymore, if it is not right anymore, then what follows is not right anymore any longer. So that is the what we can say about this peak, for this cycle. That is really an irregular cycle. Is different. I don't know if next cycle in 4 years from now will be very regular. Maybe we go back to regular cycle. I don't know. The idea is that they are going to become smaller and smaller anyway, right? So that is all what I have to say. That 200K is still in play. It seems that we have a much more muted bull run this time. That probably means maybe we go higher. By power law alone, by the end of the year, we should be around 135. That is what the power law predicts. So any deviation from that, even a 10, 15% deviation, will bring us to 150, 155, and so on. So maybe this is what we get now.
Mhm.
What I think I can say, and I will be very surprised, but is a let's take it as a scientific hypothesis that the reaction going down is going to be proportional to how much we go up. So if we don't have a crazy peak, probably we don't have a crazy bottom. We are not going all the way to the support. That is my hypothesis. Let's see if that happens like that, right? Do we still go back because we bought? Usually, right, after the peak, we had a 1 year correction. They brought us all the way to the bottom, to the power loss support. And that correction could be 60, 70, even 80%, right? If we had the same type of correction we observed in the past, after 1 year, we should go back to 75. So I don't know if that is going to happen if we don't have a big, huge peak. Maybe we simply trail along the power law. We just stay there. We oscillate it around. I'm fine because I have a bot, and the bot thrives on that. It really likes this oscillation back and forth. And actually, if we see that continuing, maybe we can even be more aggressive, in our positioning, because right now, one of the foundation of the algo that is using the power loss support as a point of reference, right? So when we decide how big our orders are going to be, are calculated based on going all the way to that power loss support. If we don't revisit that power loss support in the future, we will need more data, right? Because we cannot make decision all of a sudden. It's still very safe to use that power loss support. If we don't go all the way there in the future, maybe in a couple of years, maybe we can change slightly our strategy and make it more aggressive. But right now, it makes it even more safe. We are even more safe because that is our main goal. We don't want to be liquidated. We don't want to be one of these liquidity providers. We want to use that
Yes.
liquidity. Anyway,
That's it.
so this is my analysis of that. This
It's
is
a
a
really good
question for
point,
you,
Giovanni.
Marcus. I even
All
has
right.
mentioned you directly. Go
All
ahead.
right. Okay, it says, and one specific question to Marcus, please, can we use liquidation charge for trading altcoin too, or is it meaningless indicator for them? Thanks. Well, guess what? The good news is liquidity is the same on every asset. So you can look at any altcoin and see the same type of patterns. Even probably to even add to that, there's even more inefficiency on the altcoins. And maybe next at some particular time on one of these shows, I can show you XRP. We can look at a liquidity heat map on XRP or Ethereum. Ethereum is pretty efficient because there's lots of institutions that trade Ethereum and lots of liquidity for Bitcoin. But when you look at like an XRP or I don't know, I don't do a lot of alts, but any of that stuff, the doggies, what's them dog and ponies, the doges and the Shibu, Ebus. When you look at all that stuff, it's very, very inefficient, which makes this game even easier to play because of the inefficiencies of those altcoins with liquidity. You can see it
Mhm.
clearly. It's easy to manipulate it. You can see the market makers manipulation. It's really, really cool to look at. Yes. So yes, you can.
But the market makers have fun with it, but the
Oh
retail
yeah.
traders, they probably like if
Oh,
they
they're not
struggle
having
on
fun.
Bitcoin, on
Yeah.
altcoins, they
Yeah.
get obliterated.
Right.
So
Yeah.
be
Yeah.
aware of that. It's
Yeah.
not
This,
something
this is
like,
why we
you
this is
know,
why we focus only on Bitcoin, because
Yeah.
yes,
yeah,
it's it work. Some of these tools can work with other things, but
Yeah.
Bitcoin is so
So
beautiful,
good
so
to us.
regular.
so
Why
forgiving.
why will you want to have another girlfriend? I
Exactly.
like
Yeah.
this one. Yeah.
Yeah,
I often,
altcoins will work until they don't, and then when they don't work, you've got nothing left. That's the problem with them.
I
There's no
often,
Yeah.
forgiveness with it.
I often tell people, make your money doing something solid and predictable and reliable. Use Bitcoin to make your money. And if you want to take 5% of your profits and 10% of your profits, you can speculate on altcoins, those dogs
Sure.
and frogs all day. But most retail people with retail mentality, they try to make the money on altcoins and then go buy Bitcoin with the altcoin money. You'll never
Yeah.
get there. If you try to make money off altcoins, you're gonna lose all your money.
Yeah.
Yeah.
and this kind of also altcoin related flipping. I don't know what we mean. I think the recent comments by Tim Lee is more about how fast it can change and grow, more than reaching 100, because it will be crazy, right? If ETH reaches 100K or more, right?
The
It will
problem,
never. It probably will never happen in 20 years from now.
the problem with ETH flipping Bitcoin is there's too much supply. The float of ETH is too big in comparison
Yeah.
to Bitcoin. If you've got billions of tokens, I don't even know how much tokens ETH has, but Bitcoin has a fixed number of tokens, only 21 million. So it has a very small float. That way, all new capital coming in increases the value of the outstanding uh, supply. ETH
That
has,
supply,
ETH
Marcus, is
has, I
five
don't,
times the
yeah,
supply of
yeah,
Bitcoin. It's five
yeah,
times the supply. So
yeah,
for F to go to
yeah,
$20,000, it would need to increase its market cap right now 5x, and
yeah.
only then would it be equal to Bitcoin's market cap, and it would be 20K. So 100K seems,
And
I
then
don't know.
ETH has protocol in its programming where they can reach a consensus and produce more ETH, right? They can make more, right? It's
Yeah.
not locked.
I think the comment was more, not this comment, but Tim Lee was
Mhm,
more about how fast he can grow. Can he grow? They
mhm.
say Bitcoin grows 10 pair, right? We calculated it
Mm,
grows 10 pair in the next 8 years.
Yeah.
Will ATH grow 20 pair? You know what? I don't care. I don't care. I don't care about
Yeah, don't
ETH.
do
I will
it.
never. I will never put like any substantial amount of money
In
in
that.
ETH. I don't believe in the project. I believe it's not proof of work. I don't care.
no. Yeah.
This is why I know it sounds like crazy Bitcoin maxi, but if you are not maxi now, I mean
Hey,
it's the best of both worlds. This is why you need to have tools like ours, because then you join the two things, right? You have a long-term trajectory of Bitcoin. No other altcoin follows the power law. We know where it's going. We know the trajectory. And at the same time, you have all this volatility that you can use. If you combine the two with a
yeah,
tool like ours, you can do options if you learn how to do close calls, etc. I have friends of mine, some of the people that follow me on Patreon and so on. They show us results where we do 3, 4, 5% a month doing options using
Mhm.
the volatility of Bitcoin or maybe MicroStrategy, etc. I don't know why anybody will lose time with the ATH. At least that is
Mm.
my position
Yeah.
on it.
Giovanni makes a good point. And for anyone that actually, because a lot of people, they don't even do the bare minimum amount of research into these assets. But I strongly recommend anyone out there to go look at the difference between proof of stake and proof of work and do research on that and make your decision, because there's a big difference. And Giovanni makes a good point.
yep, absolutely.
This is for you, Marcus, maybe.
All right. Since the institutions are so much in, who is it from? J G. Okay. I'm just saying why. Why? What's up? Why? Since the institutions are so much in control, does it mean the expected September pullback will not happen as they have the same or better information? Okay. All right. Let's unpack that. First of all, um, the institutions that manipulate or have the ability to influence the market don't care about the macro. They're not too involved in that. They're involved in harvesting and creating liquidity through price action. They don't control the market, but they can definitely manipulate it. So um, there's other institutional players that do care about that type of stuff, and they tend to get harvested as well. Um, but yeah, there are some institutions, but it doesn't really affect the price that much on a localized level. Um, so just if you're a news trader or that, we'll just have to see. Maybe we don't get a September pullback. You know, nope.
Okay. And then see. Let me see. Next one. I think these are very similar questions, but you can try to answer this one.
It's 180K by October. Okay, that's not very far. And if higher, 220K by December. Realistic with this kind of liquidating normies
Mm.
stepwise on the heat map. Thank you. Um, well, the liquidity gives us the path. We already have on the map 155. Um, and if the price is going to liquidate and stay at the same level, then that's not how price action works. You liquidate and you discover a new zone. If we stay in the same zone, we're not going to get anywhere. Remember, Bitcoin and the power law reflects this. Bitcoin is on a trajectory that's slowly, methodically going higher over time. So that means liquidation has to be taken, created, discover a new zone higher. At some point, we will discover zones that are higher than the previous zone. Um, so yes, we can stair step our way there. And just in this particular liquidity pool that we just looked at, the current one, we have a path to 155 plus the discovery that puts us there. We're there if it plays out. Yep.
Okay. And this is about the bear market. So let's say that we do have a bear market. Is it a good idea to do shorts instead of these long positions like us?
I'll let
Yes,
Marcus
sir.
answer that.
Hey, let's just take from a fundamental standpoint. If Bitcoin has all the liquidity you could ever want, all the scale that you could ever want, and it goes from right to left in an upward trajectory, why would you fight that, right? So at the Pareto principle, 80-20, right? You know you should not fight that trend. Use that trend, enjoy the wind at your back, enjoy the current of the river, swim with the current. However, you can take a small portion of your portfolio, maybe 5% in the bearish conditions and short. But by
Yeah.
no means do you go with any significant amount when the trend is telling you otherwise. Do not do that.
So why, Sebastian? Why the algorithm also works when we are in a bear market? What is the
Uh,
idea?
yeah, so basically, the
Great
concept
question.
behind that is, and the algo, to be clear to everyone here, it does have the ability to go short, but we do a lot of live testing and back testing. And the reality is even shorting in the bear market on the algo often causes liquidation. This is because even when Bitcoin is bearish, it still has these upside moves. So the theory when we go into bearish conditions is to simply allow the algo to do what it always does, and that's to buy Bitcoin as value at value as it falls, and then exit on the sub rallies, which works incredibly well because what you're doing is
Walking
you're
yourself
buying
down.
something when other people aren't interested in it, and then you're selling it when everyone wants to buy it. So it's the reverse psychology of what the traditional traders do in the market, and really that power law support is the key to everything. Because if we go bearish, I can assure everyone here, for us, it's not a scary thing. It's something we're actually very excited about, which is a complete mindset shift, going from someone myself who held Bitcoin for a very long time, but then in my earlier days, every time the price fell, I said, wow, okay, I've got my Bitcoin, but the price is falling. I'm in drawdown. What can I do here? Well, now you can take that Bitcoin and you can have it making money in a bear market when it's actually down negative. So that would be the strategy around that, Giovanni, and what we aim to do.
Yeah.
Right. Perfect.
So in other words, you always have this, in a sense, this bull and bear market, right? They are um, such only if you zoom out, right? If you're zooming out, then you're starting to see a trend. But we don't care about this long-term
Bear
trend.
market. No.
Beside the fact that we know that Bitcoin is a good investment overall, that you want to have the underlying asset, because remember we are using Bitcoin as a collateral. So that conviction comes from the power law, right? But beside that, we really don't care because we care only about this oscillation. And these oscillations are there when we go up and when we go down. And so even when we have an extended bear market, you're going to have times when Bitcoin recovers. And that is when we actually
Take
cash in.
profit. Right.
take profit.
And
Yeah,
the
and
algorithm
that
can
goes.
walk and the algorithm can walk itself down every time it takes profit
Yeah,
at a lower level. It resets.
That's a really
exactly.
So it
important
can walk.
point
Yeah.
It
because
is.
it's like, yeah,
Yeah,
it's a really important point because when the algorithm takes profit, remember, let's say Bitcoin's fallen by 40%. When our algorithm takes profit, the whole scale is reset. So if for any reason Bitcoin's going to have another gigantic dump, we're not stuck in positions. We're ready for that, right? So
yeah.
Marcus brings up a good point with walking profits down.
Mhm. All right.
What about this question?
This is
Same
we're
kind of
always
similar
we're all,
questions in a way. We are.
this is the other why. We've got a bunch of whys here today. So I'll just read it out. Whoever wants to take a shot at it, give it. Guys, what can you say about Bitcoin having so much of a hard time breaking this 120 range? Will it even be possible to break through when it gets sold down every time? That's the price action. It's actually breaking through quite well. I mean,
It is breaking through.
I'm looking at it. We're coming into the mid phase of the pool. So it usually takes 3 or 4 impulses to get through there. So we're getting it.
Mhm. And this understanding about the shorts are trapped. Oh, okay.
They keep winning the fight. I don't know if they're winning the fight because those shorts, if you were to look over their shoulder into their accounts, they're in massive drawdown. Their accounts are
Yeah,
showing red. They're not winning anything. They're just
You
I've
may think
waiting.
they're winning the fight, but Bitcoin's
yeah,
going to win the war. I promise you
Yeah.
that.
No,
yeah,
those guys are in drawdown. So they've got red numbers in their account. They're the ones praying that, man, I hope it's going to go down. It's going to go to 96. It's going to go back to 100. They're praying like that, and they're just going to get chewed up.
yeah, exactly.
And then the retailers that are going long in the bottom long liquidity pool are saying Bitcoin's never going to 100K again. It's both sides, right?
On both sides.
Sebastian, you want to answer this question?
Yeah. So, hi, TV boy. Thanks for the question. So, yeah, just essentially hop on a free call with our team. We'll run you through everything on the call. Feel free to book, hop in. We'll go through the pricing. We'll take a look at everything. And yeah, you can find out anything you need to know on a call with our team, and we're happy to go through everything for you.
Yeah. Look, it's not. This is why we call it a trading system, right? It's not like one of these cheap bots that you buy for $100 on, on the internet. You don't know
Yeah.
who the team is. They don't do a show like we do every single week. We don't put our faces, our professional background, etc. This is a serious trading system. We are using it ourselves, okay? And it's something that we continuously work on. We put time, energy, we think about it even when we sleep. The entire team, different people look at different things, different backgrounds. Marcos has many years in the traditional finance field, and now he's looking at these innovative tools. Same with Sebastian, same with me. So it's something that it's more like a relationship, right? It's not something that, oh, okay, I pay this amount. It's so this is why we want to talk with you. We want to explain what it's all about. We kind of want to know your goals, your objectives. What your situation. So it's a conversation, and most
That's
people
right.
really. I was very impressed because when I tell everybody go book a call, talk to the team, and we have people that are very. My son is actually even involved with some of these calls right now, and I'm very surprised by how people tell me after the call how fulfilling it was, because all their questions were answered. It was even when they don't necessarily go ahead and join the system, they are still getting a lot of information, a lot of alpha about how algorithm trading,
Yeah.
the logic of the algo, etc. So it's really worthwhile. It doesn't cost anything. You have a professional spending, How long does it last? They call usually,
We'll spend
Sebastian.
an hour with you on the call, and
Yeah,
sometimes if we're going to go over, it's going to go over, and it's got nothing to do with whether you're going to buy or not, right?
yeah,
Something that's important to us is that this system not only can work for you, but it's something you can financially afford and something that makes sense for you to actually buy. And we
yeah,
make sure of that as well, right? We're not going
yeah,
to bring you in if this is something that's not a good fit for you either.
yeah,
It's important that, people understand that. And that's
yeah.
why
In fact,
we
many
push onto a
times
call for that
we,
reason.
kindly we turn off people. Sometimes we said, look, I
Yeah.
don't think this is a good fit. That maybe
Yeah.
later or something. Like develop some foundations. Because we also want to work with people. They have you don't have to do anything, but it's very good, very important for the user to be involved. To understand
Yes.
what you're doing, why you're doing it, etc. It's not something that we are trying to push on in the throat of people. It's a tool. It needs to be understood. You need to know how to use the tool.
Yeah, and have realistic expectations about what it can deliver, because it's
Yeah,
not a get rich quick money printer, right? It's something that's going to give you sustainable growth on top of your Bitcoin, which is, something
yeah,
that for people who understand it, and when Giovanni shows his charts, it's a beautiful thing. But once again, it's not about pricing people out. It's just about making sure that you also have the financial capacity and the right mindset to let this system work for you.
correct. Okay, yeah, guys, book a call, talk to our team, and you can always contact me later on X and ask me any question, interact with me. I have a lot of people that watch the webinar, have calls, and then they want to talk with me anyway. And please never buy the system because you trust me or anybody. It's not about trust. It's about understanding. Never trust on these things. Always verify. This is what Bitcoin teaches us. Anyways, guys, I think we are a little bit beyond 1 hour. I think we did a very good job again in covering a lot of interesting topics. We will be here next week, guys. So see you soon.